Friends, in today's video, we will discuss Invesco India Small Cap Fund. This fund has been in existence for around 6 years and 10 months, and since then, its performance has remained consistently good. It has outperformed its category averages in every time frame, whether it is 1 year, 2 year, 3 year, or 5 years. Last year, its performance has been outstanding, and it has achieved number 1 rank in the category. So, in today's video, we will discuss what are this fund's risk ratios, what is its investment strategy, how are its returns, and whether it has the capacity to repeat the performance in future as well, and also whether you should invest in this fund or not. First of all, now let us discuss the returns of this fund. In past 1 year, this fund had delivered 6.25% returns, while category average of small cap fund remained negative at minus 1.56%. So against minus 1.56%, this fund generated a return of 6.25%, which means it outperformed the small cap category by almost 8%. In 2-year returns, category delivered 21.12%, whereas this fund delivered 29.74%. So here also you can see this fund is showing more than 8% outperformance, which is a very big outperformance. In 3 years time frame, category delivered 22.86%, while this fund delivered 28.67% CAGR. In 5-year time frame, category delivered 30.37%, while this fund delivered 32.55%. One thing you might have noticed in the performance of this fund, that this fund has not underperformed category averages in any time frame, let it be 1 year, 2 year, 3 year, or 5 year. Further, most interesting thing is that this fund is now getting momentum, and for this reason, we have seen this fund reaching number 1 position in category in 1 year performance. So investing such a fund when it is in momentum and when its performance is improving can be a good choice. Then AUM of this fund stands at 7,580 crores, which is a decent AUM and gives enough space for a small cap fund to invest. If AUM of any fund becomes too high, like Nippon India Small Cap Fund, whose AUM has crossed now 60,000 crores, then such fund is forced to move towards very defensive investment strategy. This problem is not there with this fund. It can still invest aggressively. Fund has invested 97.56% of its corpus in equities, which is a positive sign. Fund is fully invested, and if market continues to rise, then fund will benefit from it. In next section of the video, we will discuss fund's investment strategy. Now let us talk about investment strategy of this fund. When we discuss investment strategy, you will notice that this fund carries characteristics of both value investment strategy and also of aggressive growth investment strategy. First, let us talk about portfolio turnover ratio. Category portfolio turnover ratio is 110.55%, whereas this fund has 52%, which shows that compared to category, this fund churns its portfolio less. It does not do too much buy or sell, and once it invests in, it gives time for those shares to bring growth in NAV. This characteristic is usually seen in value investment funds. Funds that follow aggressive growth investment strategy usually have higher portfolio turnover ratio, because they keep doing frequent buy or sell in effort to achieve higher growth. If we see number of stocks in portfolio, then this fund holds 69 shares, while category average is at 87. Now this is a characteristic of growth investment strategy, because growth oriented funds keep portfolio more concentrated. Now 69 shares are sufficient to achieve an acceptable level of diversification. So here you can see this fund is running with a very balanced strategy. If we talk about sectoral concentration, this fund looks aggressive compared to category. Its concentration in top 3 sectors is very high at 61.96%, whereas category average is only 19.98%. So here you can see it is more than 3 times concentrated in top 3 sectors. If these sectors keep performing well, as they have been doing so far, then this fund will continue to get good performance opportunities. But if these sectors start underperforming in market, then it will be a bad news for this fund. However, performance of last 6 years shows that this fund has managed sectoral concentration very well, and fund managers have shown good ability to select right sectors. Top 3 sectors where this fund is heavily overweight are services, healthcare, and financials. In these, this fund has invested 22.44%, 21.24%, and 18.28% respectively. which totals 61.96% or nearly 62%. Now, when we move towards market cap allocation, its strategy looks quite different. Here we see that this fund is following more defensive approach. Though this is a small cap category fund, as per SEBI rules, minimum 65% has to be invested in small cap stocks. This fund has invested exactly 65%, which is mandatory. Remaining 35% as per rules can be invested anywhere in large cap or mid cap, or even fund can hold that amount in cash and debt. So this fund has invested minimum possible in small cap, which gives stability to portfolio. Category average in small cap allocation is 78.98% or around 79%, whereas this fund has invested only 65%. Fund has invested much higher portion of purpose at 26.67% in mid cap shares compared to category average of only 15.71%. So more than 10% extra has been allocated to mid cap, and that money has come from reducing small cap allocation. When we talk about risk ratios of this fund, first comes beta, which shows how much volatility will be there in fund's NAV compared to category average. This fund gives more stability because category's beta is 0.86, while this fund's beta is 0.80, which is lower than category. This means compared to category, you will see more stability and less volatility in the NAV of this fund. Now, Sharpe ratio tells us how much additional risk a fund is taking to generate additional returns over the risk-free returns for its investors. Now, Sharpe ratio of this fund is at 1.27, while category average is at 1.01. This means it is not taking very high risk to generate additional returns for you. So, this risk ratio also goes in favor of this fund. Now, let us talk about alpha, which shows how fund is performing compared to its benchmark and category. Now category alpha is 1.56. What does this mean? It means that benchmark of small cap category, Nifty small cap 250 TRI, has been outperformed by category by 1.56%. Suppose benchmark of small cap category gave 10% returns. Then category alpha of 1.56 means that you get 11.56% returns from category or 1.56% additional returns. Now compared to category and benchmark, alpha of this fund is 6.01. This means it is outperforming category because category is generating additional 1.56% only above benchmark, while this fund is generating additional 6.01% above benchmark, which means if benchmark gives 10% returns, category will be providing 11.56% returns, whereas this fund will be providing 16.01%. If we talk about expense ratio of this fund, here also expense ratio of this fund is very low. Where category expense ratio is 0.51, this fund has expense ratio of 0.40, which benefits investors in form of improvement in fund's NAV. So, in conclusion, you can observe that even with a balanced investment strategy, this fund is delivering very good returns in its category. This fund ranked number 1 last year and gave best performance in small cap fund category. Further, across all time frames, it has outperformed category averages by a handsome margin. Fund alpha is also very strong, which reflects clearly in its performance. This shows fund has strong potential to deliver very good returns in future as well. And to deliver these good returns, fund is not taking very high risk, which is evident from its Sharpe ratio. Fund also does not have high volatility. All risk ratios are in its favor. Compared to category, this fund has lower volatility because its beta is lower than category. So, in such a situation, this fund has capacity to generate good returns with low risk and low volatility.